Hello everyone, welcome to Bitcoin Not Crypto. My name is Forrest Stevens, and in today's episode, I'm going to try my best to explain the convertible bond strategy that MicroStrategy does. But before I do that, I want to tell you about a film that I am fundraising for. It's a film called The Land of Volcanoes and Bitcoin, and it is about El Salvador's historic adoption of Bitcoin. And it's all funded with Bitcoin through Geyser Fund. There's a link in the description for that. So MicroStrategy has two different ways that they raise money to basically be able to buy more Bitcoin for shareholders. There's this term called accretive dilution, and it is a way of using these financial instruments that they have access to because of the fact that they're a public company and they have so much volatility, and they are able to trade at a premium to their net asset value. The at the market strategy they have basically only works if they're trading above the value of the Bitcoin that they hold. And in that way, they're able to sell new shares into the market at market value, right? That's ATM. And they are able to use that cash that they get from selling these brand new shares to then go around, turn around and buy Bitcoin. So that's strategy number one, but let's dive deeper into the convertible bonds because that's where it gets real nice and confusing. And the way the convertible bonds work, basically. A convertible bond is different than just a regular bond, right? It converts. It can convert into shares. So let's explain what a bond is first, and then we need to explain the convertibility of this bond. So a bond is a debt instrument. Basically, if you buy a bond, you're expecting to, at the end of the term of the bond, you're expecting to get back the initial investment that you've made plus an interest rate on top of that. So if you have a $100 bond and the interest rate is 5% and it's a 1-year bond, you expect to get $105 back at the end of it. So your $100 plus 5%, which 5% on 100 is $5. So that is your total return from that bond. What's crazy about the bond side of MicroStrategy's convertible bond is they have been able to do sub 1% bonds. So somebody buys a bond for $100, they get $100.60 at the end of the year if it's a 1-year bond. They don't really issue 1-year bonds. They have these really far out bonds, and the reason they do that is because of the convert. And the convert adds value to this convertible bond. You know, if you were to look and value a bond that pays back 60 cents on $100, that wouldn't be worth much to you. And in fact, you would definitely lose purchasing power from that bond. You would lose just based on inflation. But you're not going to actually lose money in the nominal sense. You get your $100 investment back, plus a little bit of this interest. So within there is like this guarantee, although it is, you know, not necessarily a guarantee, right? Things can happen where a company is not able to pay back its bonds. Bondholders are the first to get paid back. Stockholders are the last, for instance, if a company goes bankrupt. So there's quite a bit of security in the idea of buying a bond compared to stocks or other riskier investments. So that kind of explains the bond a little bit. Now, the convertibility is similar to an option. So if you understand options, if you understand specifically call options, then you will understand convertible bonds a little bit easier. If you don't, I will explain, I'll explain it as best I can. So within this bond that MicroStrategy offers is the ability to convert the ownership of the bond into ownership of the shares of MicroStrategy. In the convertibility, you buy the bond, say MicroStrategy, this is just an example, you could create this example for any company that sells convertible bonds. MicroStrategy's share price is $100 and they're selling a bond, they're paying a 1% interest, or sub 1%. And they have a convert in there that you're able to trade in your convertible bond for shares of MicroStrategy if the price of the underlying shares goes to $140. So within this debt instrument, it's a fairly complex, instrument. You have to be aware of what you're buying, but in there is a call option basically. So if the bondholder buys this convertible bond and in there is the ability to convert into shares and that is out of the money and that share price isn't reached by the time that convertible bond matures, then that part of it will be worthless, right? Because why would you want to convert into shares at a higher price than what it is currently trading at? So this is a nice sort of built-in incentive for MicroStrategy's share price to go up. But basically that isn't the reason that it would go up. But within that is the bondholders wanting that share price to go up. If you look at an options chain, if you try to buy a call option, a long dated call option. So these convertible bonds, they're 2, 3, 4, 8, years down the road is when they actually convert. They're long dated. An option becomes more valuable the further out in time that option expires because you have more time in the market for that share price to reach the strike price where that option becomes in the money and valuable to exercise. So that is one metric of how a call option becomes profitable and one option of how a convertible bond and that part of the convert becomes profitable. The other way that it becomes profitable is depending on the volatility of the underlying stock. So if you look at option chain of an extremely volatile company like MicroStrategy, those options are going to be much more expensive than a low volatility equity. And the reason for that is because something that's very volatile, it is more likely that you will end up being in the money and that call option won't expire worthless at some time of owning it. Maybe it'll expire worthless because of the volatilities up and down before, at the end of its term, but within there is the ability to sell it while it's in the money as the volatility brings it into the money. So those are basically the two things that make an option valuable and make a convertible bond more valuable, more or less valuable. It's volatility and the duration of when it expires. Now, MicroStrategy's volatility is directly tied to Bitcoin, and Bitcoin is incredibly volatile. Right now, it's basically 65% implied volatility, and MicroStrategy is double that at 130% implied volatility. So because of that volatility, their options are worth a lot. If you go on MicroStrategy's option chain, they're worth a lot. And a bond is priced, a convertible bond is priced with the bond offering plus the ability to convert. So with that option built into it. And so they can charge a lot for these convertible bonds that they're selling. Now with the money that they make from these convertible bonds, they're then able to buy more Bitcoin, put it on their balance sheet, and increase the actual value of MicroStrategy itself, which pushes it even closer to those options becoming in the money and those convertible bonds being able to convert into shares. Now, for the most part, this is my understanding from things I've heard, things I've looked into, things I've researched. There are these convertible bond desks. There are lots of convertible bond buyers that are forced to buy bonds, and specifically convertible bonds, because of specific regulations and mandates within their industry. These might be pension funds or something like that, retirement accounts, and they have to buy a certain amount of convertible bonds. Now, historically, MicroStrategy's convertible bonds have been the best performing. They've actually outperformed Bitcoin itself, which is quite amazing. So there's a high demand for these convertible bonds at all sorts of different strikes and all sorts of different duration, all sorts of underlying percentage or interest that you get on top of the initial, like the bond itself, the convert itself. all of these things, they can issue different types of ones, different duration, different percent, different out of the money, in the money, whatever, and those will be bought by different buyers. Now, there are these convertible bond desks that buy these, this is my understanding, they buy them and then do this sort of strategy where, because they have this underlying call option that is a long position, they can then short the bond that they hold, the convertible bond they hold, by short selling the underlying shares that they're basically owed if this bond converts. And because of the volatility, they can short it and then they can buy the underlying shares, and they can play the volatility. So they're going to short it when they think it's overbought, and then they can buy back those shares when MicroStrategy's price goes down, and they have this call option that is always going to kind of be, well, as soon as it becomes in the money, becomes a way of them being able to guarantee ownership, to be able to basically support the short that they have. Now, the reason they do this is not because necessarily they'll outperform just owning the bond itself, but because they can have more of a guarantee of some kind of profit from it. They do this strategy, they might be successful, the price might just run up so quickly, and they might never be able to cover those shorts until the convert actually happens, but they at least make the bond payment back, plus the amount of money that they made from creating the short and then covering the short with the convert. So they're able to close their short position at the time of conversion of this convertible bond. And if that convertible bond is way in the money, then they basically get the difference. Now, they might have been better off just not having a short, but they don't want to necessarily risk not doing this sort of shorting and buying and shorting and buying of the underlying stock, because what would happen to them if MicroStrategy's price didn't go high enough for that convertible bond to become in the money? They would have only just gotten their money back and whatever interest rate, which is really low, on the bond itself. So in this way, they're able to play a little bit and get a little bit sort of more guaranteed, but then maybe not capture as much upside if they get caught in a position where they're not able to cover their short until the convert happens. So my understanding is these convertible bond arbitrage desks, they are the majority of the buyers currently of these convertible bonds. But there will be other people that just buy them because they historically have outperformed Bitcoin, and they're a little bit maybe less risky because they at least get their initial investment back plus that interest. So they have, it's almost like these convertible bonds have like a put in them at the buying price and an out of the money call built into them and an interest rate. They're quite an interesting financial product, and they're very, very valuable, a lot more valuable than people that just kind of say, okay, these convertible bonds, you know, they can make money from them. People don't really realize how valuable this strategy has been for MicroStrategy and will continue to be because of the volatility of MicroStrategy and the liquidity of MicroStrategy. So they've kind of hit this like takeoff point where Assembler Scientific wouldn't really be able to catch up because they can't get enough Bitcoin on the balance sheet, and they won't have as much liquidity in their options market and their bond market, and people being able to buy and sell back and forth the shares, and there will be slippage for these arbitrage desks. So they're going to go in these deeper markets, and MicroStrategy is the deepest market, the most volatile market, and in that volatility is the value that these arbitrage desks can take out. Now, just to reiterate, this benefits MicroStrategy in the best way possible. It allows them to sell these out-of-the-money options and these bonds at extremely low interest rates, and they can pay those interest rates with the cash flowing business intelligence software company that they have. It's a free cash flowing company, And if that doesn't quite cover it, they still have this at the market option of selling new shares, and they could pay their interest back if they had to by selling these new shares into the market. Now, for the most part, however, the at the market share selling is accretive in the way of them taking that cash that they get and buying Bitcoin with it. And just like the at the market strategy, the convertible bond strategy is a way of them being able to acquire more cash and being able to buy Bitcoin. And that is the fundamental business. It is a Bitcoin acquisition company. They call it a Bitcoin treasury company, BTC. They called it, or they're attempting to make it into a Bitcoin bank, but they acquire Bitcoin. That's what they do. And the Bitcoin per share goes up over time because of this slightly simple strategy, but they're the only ones that can really do it at this scale and with this amount of volatility. So they have an edge over their competition that might be trying to do this as well. Now, other companies could totally try to do this and have some level of success. And if they weren't a super successful business, you know, just a cash flow positive business in some way, they're going to become more valuable from imitating this strategy than they would have been having not imitated this strategy. So and the playbook's out there. Saylor talks about the playbook. He'll help other companies adopt this playbook, because as more companies, as more institutions, as more nation states, as more individuals buy Bitcoin, that increases the value of the net assets that MicroStrategy has, and they have 250,000 plus Bitcoin on their balance sheet, and that just makes them more valuable. The more gets taken off of these exchanges, the more gets held by banks, institutions, and all of the buyers of Bitcoin. So they want to create this strategy, they've open sourced it, and that benefits them if other companies adopt it. It's this really amazing thing where most companies try to have some sort of edge over, like, you know, MicroStrategy really does have an edge over these other companies. Other companies, when they have an edge, they try to safeguard their secrets. They have, non-disclosure agreements. They have all sorts of cybersecurity to keep their secrets. And other companies will try to emulate and copy in some way, but do it sneakily, where they're not going to get, you know, some sort of infringement, law infringement. This is totally open books. Michael Saylor does not have a trademark on this strategy, and other companies have in fact done really well copying this strategy, and we will see a lot more of it. And all of this goes to benefit MicroStrategy as a company. Now, this is a good investing opportunity, in my opinion, and in my opinion, I hold a fair amount of MicroStrategy and have done well with it. And I don't see in the near future an end to their ability to issue converts, issue at the market, and issue new shares into the market and not have buyers. They have buyers, and there's this interesting thing that happens. And if you get into the MicroStrategy community a little bit, you'll see, you know, Bitcoin's price go up, MicroStrategy's price kind of stay level or even go down. And what's happening there is Michael Saylor is most likely, now this is all speculation because we don't have the inside scoop, but most likely he's selling new shares into the market because otherwise that value of MicroStrategy would go up with Bitcoin at a leveraged pace. And he's extracting a little bit of cash at the moment, and then he'll buy Bitcoin with it. And that's exactly what we want. We want Bitcoin per share. If you believe in Bitcoin, you want Bitcoin per share. That's the reason to own MicroStrategy. Now, it's not in kind. You can't own MicroStrategy and then say, okay, well, I own this much Bitcoin that MicroStrategy has on its balance sheets. I want to withdraw it. Now, that's not exactly how it works. You're just as you can't extract any sort of bit out of Apple by owning Apple shares or Google or Amazon. So you don't actually own that Bitcoin. You own a derivative, and you own basically on paper a company that acquires more Bitcoin, and per share you have more underlying Bitcoin ownership, but it's not actual ownership. So that's something to consider, especially if you believe in the kind of sovereign idea of owning Bitcoin yourself as an asset, as a currency, and as a tool and a technology. Now, if that is something you want to do, the way I buy Bitcoin, the way I've bought all of my Bitcoin is through Bitcoin Well. This is a great company. It's got the lowest spreads in Canada. It's privacy focused with non-KYC options. And you get, they have this competition thing where if you sign up with my link, you'll get these free points, and you can throw a coin in the Bitcoin wishing well, and you'll get some free sats over the Lightning Network. So there's a link in my description. It's a referral link. If you sign up on there, I'm able to get a small kickback on my end, which goes to support more videos like this and my channel. And you get, in my opinion, the ability to buy Bitcoin in the best ways. They send it directly to your wallet. This is what I love, right? I don't want to promote an exchange that ends up going under, you know, like FTX or BlockFi or any of these other sketchy things that hold your Bitcoin, right? Bitcoin Well, they just have these great morals and philosophy, and in that is the fact that they never hold your Bitcoin for you. They're not even really an exchange. They're just a platform. You buy it through there, and it goes directly to your wallet address. And in that way, you don't open yourself up to the third-party risk of having this custodial type situation where somebody else holds your Bitcoin, right? If you feel nervous about owning MicroStrategy because they hold the Bitcoin and you don't actually lay claim to it, then Bitcoin Well is, you know, fits with that ethos and is, you know, not holding your Bitcoin for you. So check them out, link in the description. Thanks everybody for watching. If you felt like I didn't explain this convert properly, if there's some extra details that I missed, please comment in the description below. I'm happy to explain it in more depth in a next one or whatever, just in the comment section as well. I also have a Discord with a MicroStrategy channel in there, which we can chat in. The link for that is in the description as well. And occasionally I'll throw up a QR code from Bitcoin Well for some free sats to whoever scans it first in that Discord. So go ahead and join, and you might win yourself some free Bitcoin.